All right, everyone. We're gonna get things started here. We're just waiting for a couple more people to come on in. Just want to thank everybody for joining us for the Unlocking Realtor Success, a roundtable for realtors discussion. It will be myself as well as K Law Professional Corporation and MERIX. And really, I guess I should probably introduce myself a little bit as well. My name is Corey Bahadur. I am a mortgage agent with Mortgage Savvy. And the reason why I'm actually doing this, which we'll jump into now, is because I've been going to a lot of different like events and speaking sessions, and the number one thing that I do hear from everyone is vet your realtor, vet your mortgage professional, vet your lawyer. And what this kind of translated to for myself was that, when they were looking for vetting folks, they were kind of mentioning how many years have they been in the industry and things of that nature. And especially now with the rates themselves looking like they may be going down on June 6th, fingers crossed. We have to arm everybody with a little bit more tools in order to have better engaged conversations. For myself, I know that if I'm talking to somebody who actually knows the other aspects of whatever it is that I'm doing. So similar to like purchasing a car, if I'm talking to the sales manager, but they also know how the financing works and a lot of other aspects like service, I'm a little bit more inclined to do business with that person. And those are the type of tools that we're going to be providing you guys with today. So first, I would like to introduce our panelists that we do have on the panel. That would be Jamil Shamji. He's from K Law Professional Corporation, as well as Philippe Nunez, who is with MERIX. So welcome, guys.
Thank you, Corey.
Also, I would like to probably start with to just give us a little introduction of yourself, what you do, and who your group is.
My name is Jamel Shamji. I'm one of the partners at K-Law Professional Corporation here in Kitchener. We're down on Frederick Street. We're like a multi-practice firm focusing primarily on transactional law, lots of real estate, corporate wills, pretty much anything other than criminal or immigration law. But the bulk of our practice, the most of our practice and time is spent on real estate transactions, purchases, sales, mortgages, transactional law, in real estate law.
Fantastic. And Philippe?
Nice to meet everybody. Thank you so much, Corey, for doing this. My name is Phil Nunez. I am a business development manager for MERIX Financial. We are a monoline lender, lending in the residential AAA mortgage space. We are owned 100% by MCAP, for those of you who haven't heard of MERIX Financial. And I'm excited today to be here and speak to you.
Fantastic. Well, it's good to have both of you guys here. Okay, so I just want to go over a little bit of housekeeping rules. This session is recorded. We will provide a copy of the recording to all attendees. Any questions that you do have, please put them in the chat box and we will try our best to get to them. But one major thing, we do not want any of the information that's being provided today to be misconstrued as legal advice. If you do have any specific questions or queries, feel free to definitely reach out to Jamil. Same thing when it's in regards to specific files that need funding. Please feel free to reach out to Philippe. Okay. Now, so let's just jump into it. All right. So the first question that I do have for you guys is, what are some emerging trends or innovations in the industry, in your respective verticals, obviously, that could significantly impact the Ontario housing market in the near future? I know for myself, it's something where due to the pandemic itself, there has been a rise in technology being used, which allows me to be a lot more places at once and also service my clients in a lot more effective manner, and also keep track of them. So a lot of the tech innovations is something that definitely affects the market. The other thing would be is that June 6th. So I'm very focused on June 6th. If you guys don't know what June 6th is, it'll actually be the next rate announcement. Currently, from what I've seen, inflation looks like it's below the 3% mark. So we do have our fingers crossed. There's no guarantees, but I can definitely see that shaking up the market. We'll see a lot more refinancing taking place, clients finally making that plunge into the market, and investors pushing for new properties. With yourself, Jamil, what do you see in terms of emerging trends?
Well, I think you touched on it as far as technology goes. We've noticed um, uh, during the pandemic where everything kind of went virtual, there hasn't been a clawback. So we're seeing clients really all over Ontario. Like while we're Ontario lawyers, we can service anywhere. And that's been really I think it's like a client experience thing for many people. Like many people, I guess, depending on generational like what generation you're from, or I guess how comfortable you are with technology. So there's many different platforms. DocuSign, we use something called Pactima, Adobe Sign. Those things make it easier for a client to actually fulfill the documents they need, at least from the lawyer side, wherever they are. And we've actually had clients in our firm that have signed up in all the way out in Kazakhstan trying to get a mortgage done that was necessary, whereas maybe 5 years ago they would have had to have done it before their trip or really even come back. So that's been really great. Now, as of January of this year, there's many more legal requirements. There's been so much talk about fraud in the market over the last couple of years, especially with respect to mortgage transactions. So, as of January of this year, there's a heightened requirement through the Law Society to have third-party ID verification methods in place, which every single transaction, basically in our firm, is going through those systems, those third-party providers. But in there, we can actually have clients upload copies of their driver's license, their passport, and sync it directly to our conveyancing software, which is great from it's great from a security perspective. I think a lot of clients are a little bit reluctant because something's new, but on the same end, it gives them the comfort that through technology, everybody, law society, the banks, their lawyers, brokers, everyone is taking the steps to make sure that the transaction is as safe as possible. So that would be my answer with
Awesome. Yeah.
respect to technology. Has been a major shift in the last couple of years. It's almost like we've moved in 5 years, 4 years, we've moved forward 25 years from where we were back in 2019.
Yeah, I definitely noticed that too, especially in the mortgage industry, just with the technology. It's like we were kind of cavemen back in the day, like back in 2019, running around with paperwork to have people sign these documents. But since we weren't allowed to go outside, it kind of made things a lot more easier overall. I've had clients who they work like late hours, so they can't really get time off of work to go to the lawyer's office to sign. But with things like DocuSign and what have you, it's making the transactions a lot easier. What about on your end, Philippe?
Yeah, so a couple things. So first of all, let me start by saying this: as a monoline lender dealing in the broker channel space, we don't deal direct to consumer. Okay, so for anybody on the call that would try to reach out to me for a mortgage, unfortunately, I would have to transfer you back to a mortgage broker. We are broker driven. We are business B2B. So Corey, of course, being fantastic, mortgage savvy, being one of our fantastic partners. Please reach out to Corey, reach out to Mortgage Savvy, and you'll get great advice. And if we're the lender of choice, then absolutely we will support them as we continue to do regularly. Okay, so important to say that because again, we are not DTC, we're not direct to consumer. Okay, so a couple of things that were said there that I think are really important. And Jamil, you spoke about this. Tech has been our biggest challenge and opportunity at the same time. Challenge in the sense that there's so much tech, there's so much evolution happening on the AI front that what tech should we invest into? And that's getting harder and harder to decide where to deploy capital to, right? So that's a difficult challenge. Opportunity, of course, is that all this technology is going to speed up our process even more. It's going to make it easier to deal with lenders. Brokers love that, right? Less paperwork, less confusion, less issues. I think this tech, together with government regulation, if it goes the right way, can really bring us to a spot where we eliminate some of that, and I'm going to use that word loosely, fraud. That's a difficult word because you're not fraudulent unless you've been, proven that you've committed fraud, right? So I'd call it maybe more misrep, right? And so we have to be very obviously careful and understanding that the misrep level has grown dramatically in our market. A lot of it has to do with price increases, people being out of market, and so the creativity starts to get a little bit more emphasized, let's say. We are, of course, on top of that. We're very heavy on it. And I do think that some regulation is going to come our way to change that. I think tech can help with that. One of the things I would like to see, you talk about new things you would like to see. I would love to see a little bit more of us transitioning into that open banking type of mentality where we could, obviously within the constraints of privacy and confidentiality, share more information to be able to reduce this impact that fraud has. We have a lot of realtors in on the call. One of the issues with fraud is that it's created or misrep. It's created this heavy impact on markets of prices growing too quickly, too fast. And as much as we've all been high-fiving each other with prices growing the way they are, there are significant consequences from that. And things need to grow balanced, not quickly. And if they grow too quickly, eventually regulation takes over. I think we have enough regulation in Canada. I think that we're going to have more if the trend doesn't change, right? So a little bit concerned there on regulation, how tech will allow us to be more flexible. Things like, we had Snap NOA that went away a little bit, but things where we can connect directly to the CRA, where we could connect directly to the client's banking. I think some of those innovations will start coming through. Things where we could run through software documents and very quickly make a decision on whether or not that's misrep or not. So all these things are being implemented as we speak. Okay. The other thing that we're changing a lot is as a lender ourselves, and not necessarily the industry, but ourselves, we are focusing on changing our AAA solutions and how much product we can offer as a monoline. We've offered the vanilla mortgage for years, and that's where we kind of stuck to. We are developing that and evolving into products like HELOC, second charges. So, stay tuned, Corey. A lot of great things happening. And, ourselves, we want to see this market grow and continue to offer opportunities for our business realtors to continue to grow and everybody to fulfill their dream of owning their homes and their investment properties.
As you were talking about tech, I actually had one thing that I wanted to ask you. So, one major thing that really helps realtors is getting a pre-approval, which is different than a pre-qualification. Very different. So, with all these advancements and things that you guys have been seeing in the market from a lender perspective, has that been speeding up the pre-approval process in that sense, or like is it still the same timeline for it?
Yeah, I mean, Corey, you're an experienced mortgage broker. You've probably seen all the lenders go the other way, less pre-approvals, right? And there's a reason for that. There's many reasons for that, actually. Um, some of it is the lender or lenders were not seeing necessarily the transition or conversion of pre-approvals to business. And as you know, pre-approvals, there's a cost to it. There's a operational organizational cost to it. There's money buying because you have to buy the rate, and so there's consequences. We
Yeah.
do have a pre-approval process. It's not great. I'm not going to sit here and tell you that it's fantastic. It's not. It has premium rates on it, so much higher rates. We don't do. We literally don't look at the deal. It's all automated, and so that piece of paper really is it worth something? Debatable, right? I mean, maybe the client feels comfortable with it, and I accept that. But realistically speaking, that's really not an approval, right? And so some lenders are still doing it. I don't know that we're going to see great, significant evolution in that pre-approval market, just because, again, it's not something that's been extremely, and I hate to say this word, but it hasn't been extremely profitable for the lenders and the lender space to really do those pre-approvals knowing that the conversion rate is not significant, right? And so I understand why clients want pre-approvals. Obviously, brokers have taken that market from us. I mean, Corey, I'm sure you do this. You go through your client through all the F's and abouts on the deal to make sure that your client can qualify and make sure that they're
Yeah.
making a right decision. As a lender, I'm always going to say, and realtors are not going to like me for this, but COF on everything, condition of financing on everything, right? Obviously, if you're able to do the math and feel and remember, guys, Corey has has access to different types of lenders, right? So if your client doesn't fit A side, maybe they fit B side, and so he can make a comfortable decision of allowing a customer to move forward on the deal or not, more than even us, right? And so listen, in other words, listen to your mortgage broker. They can definitely give you great advice on whether or not that client is going to qualify or not.
Good answer. Good answer. I like your answers.
Yeah, well,
Okay, so I guess I'm gonna stick with you a little bit longer, Philippe.
yes.
Because I mean, people hear banks, they hear monolines, they hear A lenders, B lenders, privates, and for yourself, you are a monoline lender.
Mhm.
So what is that? What is that?
Well, very simply and very, very simply put, is we do one product. The word mono comes from that. And the product we do is mortgages. That's it. We don't get involved in anything else. And I say that very carefully because we also offer creditor insurance and all that. But realistically speaking, we're not your typical bank that would have other products, investments, accounts, credit cards, lines of credit, et cetera, right? Obviously, within the residential real estate mono vision, that's what we do. We're dedicated ourselves to mortgages. We're mortgage specialists. And so that's the first big separator from us and any other of the big banks, right? The other thing we try to do as a monoline is we try to create a competitive world. We live in a banking system, finance system in Canada that's very oligopolistic. I don't know if that word exists, but it's really an oligopoly of a few, maybe six big lenders. And so we're coming in to try to offer options that go beyond that. So we're creating a market for your client. We're trying to make the market more aggressive, more offers, more services, better products, better solutions for your customers. So I think that's a good thing. So there is definitely a space for us monolines. The other thing is we've dedicated ourselves not to go direct to consumer, but to deal with mortgage brokers. So I think mortgage brokers overall love monolines because they know that it creates a level of sustainability for their market, including making those bigger banks more aggressive in their offerings through the broker channel, right? And so that is because we exist. If we didn't exist, they would just do whatever they wanted and just keep their business in the branches. And I say that very loosely. I worked for a big bank for 15 years, the Big Red, and I have a ton of respect for them, and they're great for the Canadian market. They're strong businesses. So this is not a knock, but the more competition we have, the better it is for the market. Let's be realistic. And so that's really the space of the monos. We're here to be specialized in the good product, help our brokers grow their businesses, help our brokers grow their client base, and realistically create a level of strong competition against a system that really favors the oligopoly, right? And so that's what we are. And for our, people always ask, what's MERIX, Phil? What's that? Well, MERIX and First National, and I should say MERIX slash MCAP and First National are two behemoth companies. They're huge. We're in the market representing, I think we have $160 billion of assets under management right now. So we're a big company. We're extremely profitable. We're type A. We're owned by strong investors. And we're here to stay. We've been here for, I don't know, 35 to 40 years. We're not going anywhere. And I think we're important for the market, right? So that's where the monolines, I think, have a lot of importance. We're evolving. We're growing. As we grow, we have more capital. More capital means better products, more solutions, more competition to the big lenders.
Sweet. And I guess like one other question I do have is like what sort of criteria does a lender like yourself prioritize when assessing mortgage applications?
Well, and I won't speak for the full monoline space just because
No.
monolines have A and B's lending, right? And so obviously
Right.
each type of lending has a different criteria and how we analyze the application. For us right
Hmm.
now, being a residential AAA, and AAA means the client that's, easy, that fits into the model. We're very, OSFI rule driven, if you want to generalize it. And so, we're very, I hate to use the word, but we're almost like a vanilla type of lending in the sense that we fit a certain criteria, a certain profile. I will say at MERIX Financial, and Corey, you know this, we are very flexible in how we analyze the policies and how we think outside the box, but we're still
Yeah.
constricted to those rules because we fall within the highest level of lending, which is where the client's going to get the best pricing, the best solution for them because they represent less risk for the market. Less risk, better rate, easier product, also more constraints in terms of the approval system. So when it comes to that, but now I will like to say this, and I want to emphasize this, within the rules, within the goalposts, we are very good at analyzing and finding opportunities and finding ways to get deals done that the lesser creative legal person might not do, right? So we're still open for business. We're still doing within our guidelines as much as we can to help our customers get whatever they're looking for. Okay.
All right, sweet, sweet. So, like, I guess, well, one question may be like, considering obviously it's on the A side of things. Is there like a threshold, like a credit threshold, or things like that that like you kind of would be like, we definitely
You mean
cannot
like,
take you
yeah,
this
I mean,
soon.
look, not to go through the full policies, right? But yes,
Yeah,
we follow the 5 C's rules, right? And so I'm not going to go through the full 5 C's here. I promise you, it is very boring for those of you who don't deal in finance. But it's also, so Corey, you would understand. It's obviously the best profile type of client we're looking for. So we look at things like character, experience, credit mitigation, collateral, the property. What type of property are we talking about, right? So we look at a series of factors and the client's capacity, and we follow the threshold of the 3944 GDS TDS, right? Total debt service ratios. We will not go above that 44% because we want to deal with that customer we feel is very comfortable paying their mortgage, right?
mhm,
um it's we're also restricted by the contract plus two qualification. So realistically speaking, we're not qualifying a client at 44% TDS. We're really doing it at like 36, 37, if you consider the contract plus two, right?
right,
Especially in a scenario where rates might actually come down. So the realistic thing is here is that we AAA lender, we're going to be very goalpost driven, and we're going to stick to those policies. And if a client has extreme derogatory, missed a bunch of payments, has a beacon below 600, that's going to be very difficult for it to fit our criteria, right? If it's your Now keep in mind that the majority of Canadian clients actually fit this criteria, right? So it's not.
right.
I know we see a lot of clients that fit outside. Realtors on this call might see a lot of customers that don't fit, in particular business for self customers. But the reality is we do fit still a lot of those customers in this type of business, right?
Sweet, sweet. No, yeah, that is definitely true. Okay, well, I want to jump into another subject really quickly here. This will be for everybody. But I've just been noticing, just like through conversations that I've had with some of my realtor partners and even new people that I meet, and also just consumers. There's been like kind of like a couple like misconceptions that I kind of have to dispel. One major one, just to give you guys an example, would be a thing where a client has great income, so automatically it's assumed that this client will definitely qualify for an A lender because their income is great. And that's definitely something that I need to dispel. So it's kind of like a misconception in that realm, mainly because of the fact that like you were saying earlier, Philippe, in terms of like their spending habits and things of that nature, those things can really affect your overall income. So if somebody's making, 200,000 a year, and that doesn't mean that they're definitely going to qualify, because what if they're spending 150 in the year, or what if they have debts that are there? Or one major thing too is that would be considered another thing I would want to talk about, is the fact that if somebody has a line of credit and they may not be spending their line of credit, there are certain lenders that take it as they have to amortize your entire line of credit. And that then works against your overall income. There's other lenders who may not see it in the same way and only look at the balance. But these are all different reasons as to why, discussions like this need to take place. I'll be doing a lot more of them. It's just so that we can actually be armed a lot better. Because what if a client were to say, hey, you know what? Maybe they heard the thing about the line of credit and saying like, well, because I have this line of credit, I can't get a mortgage anymore. So you know what, realtor, I'm not looking to be in the market. When really there are some lenders that can help with that. And then the same thing vice versa. Saves you guys some time if somebody comes in with a $530,000 line of credit, but they're looking for, let's say, going to a AAA lender that doesn't favor line of credits in the same way. So I guess in your case, Philippe, like what are some misconceptions that take place on
Well,
on your end, and
yes.
ways we can kind of remedy that?
So we go by balance, not by limit. So we are one of the few that does the opposite of that, right?
Yeah,
Which is great. But
yeah.
my thing with this is that I built my career based on partnerships, and I used to joke around and say, anywhere I go, any customer I speak to, I carry a backpack of partners, and that includes great lawyers, great accountants, great mortgage brokers, great realtors, et cetera, right? And so my biggest line on that is stick to what you're good at, right? Stick to what you do well, what your profession is. If I'm a banker slash mortgage specialist, I'm not trying to do Jamil's job and give somebody legal advice. That's insane. So I'm going to bring my backpack of partners. I'm going to say, hey, speak to Jamil. Here he is. He's going to be able to answer that question for you. Okay. And keep in mind, Corey, we get these questions all the time, even with this new thing now with the NRST tax, and brokers are coming
Mhm.
to us asking us, and I keep telling them, like, that's not a lender decision, that's a legal decision. You got to go speak to a lawyer, right? And so we're very careful that we stick to our own lanes when it comes to that.
Mhm.
What I would say to realtors is, rather than you trying to really answer every question in every industry and every aspect of what we do on the real estate side of things, hold that backpack of partners and make sure that you're consistently and constantly talking. Go for a coffee, go for lunch, whatever it is we do, and ask questions and talk about it, and get that specialist to speak to your client so that they feel comfortable with whatever decision they're making. Okay. You made a great point there, Corey. It comes down to the rate. I hear this all the time. What's my best rate? Well, the answer is, I don't know. Not until I actually have a conversation with your profile. So if you're a realtor and you're talking to your customers and you're quoting rates, it's there's a something high percentage probability you're making a mistake on whatever rate you're disclosing to that customer, right? So you got to be careful when we're having these conversations to stick to our own alleys, right? Don't go into a place you don't know how to answer it. And lending, like like buying real estate, like giving legal advice, these are complicated things that we individually have specialized in our own little, target areas, right? And so let's build these partnerships, Corey. That's why I love that you're doing this, because it creates connection between people that are experts, you know, in their subject matters, and they could provide value, real value for customers, right? And so realistically speaking, stick to your partners and let's continue the conversation going.
Jamil, what about you?
Like I would technically echo Phil's Phil's recap there. I don't with by the time the deal comes to us, quite honestly, it's already gone through the steps of what's the rate, what's the amount, what, like, we don't touch that. Really, we get instructed by the lender and of course the client of how to, finish off the deal. So uh, I would echo what he said about, let the brokers do the broker work, the lawyers do the lawyer work, kind of everyone together. It should be, for all intents and purposes, a team effort altogether. But uh, stepping into something about what's the rate, like, I can help you change when's the payment, but that's about it at that point.
Yeah, no, I definitely agree with that. I do think that like case in point would be is that through speaking with both of you guys, I can now, maybe start off a subject or lend a little bit more to, hey, instead of just saying, hey, talk to my guy. Right. So like in the instance of even Jamil, like how you were saying before we started the call, which was a great analogy. Actually, could you give that analogy again? The baseball one, the closer.
I don't want to limit what we do, but what I said to you guys at the beginning of the call was, for to treat it like at least a house purchase, like a baseball game, we're effectively the closer. So it's the lawyer's job, and it was a bit of a deprecating joke I had at that time, but our job is to be the closer. So if the job is done, if the transaction closes, well, clients tend to see it as we did our job, and that was being the closer. But if the deal doesn't close for whatever reason, just like a closer, a lot of the blame will go to the lawyer or the closer at that point. But really, at that point, we're not in control of innings 1 through 8. The hard work is done by the realtors, knocking on, like, going house to house, finding the right property, going through the mortgage, through the lenders, the brokers, the lenders, to actually get the rates together. And for us, it's at the at the final innings to get to do our job.
Great. Yeah, I like that analogy. That's definitely a good one. I'm gonna stick with you for a little bit, Jamil. I wanted to know if like could you share any like recent like industry developments or like regulatory changes that may affect some of the transactions that realtors should know about?
Well, I think 2023 came with a lot. Okay, like there was new, anti-flipping laws that came into place. A lot of realtors, you know, uh, almost like investment advisors during the pandemic, a little bit after. How do we help these clients get as much money as possible? And we really saw that. But then when these flipping laws came in 2023, January 2023, that was a major change for people thinking we cannot just offload these properties as quickly as we expected, or our time horizon became, instead of a couple months, couple weeks, couple whatever it was, it had to be a significant 12-month at least period. That's one thing that's come in. So where these new regulations or laws have come in, I think it's really important that the realtor, at least being the first step in this process for the clients, is to really understand what the end goal is for the clients, what they can handle, what their expectations are, and why they want to do it. I do not. I strongly advise you don't give the accounting advice. You don't give the legal advice, but something to at least mention to them. Well, if you're planning to flip this house in a couple months, you should be aware that there are ramifications. Talk to a lawyer, talk to the accountant. Another one that's come up that really I think shook a lot of realtors because of the strong language in at least the act was the prohibition, or at least the ban on the foreign buying of residential real estate in Canada. And that I know there was major penalties, financial penalties. It was basically any professional that was involved, a lawyer, broker, realtor, anybody that's helping somebody that is banned from buying this piece of residential property. Everyone would be held liable, no matter what stage you were in of that process. So it became everyone's job to actually vet the clients as much as possible from the beginning. There were many exceptions, and we as lawyers had to kind of do a lot of our own homework, and maybe even explaining to realtors and brokers, like, maybe we don't want this deal because of this reason, and maybe like and that's a hard conversation to have with clients after they've already signed on the dotted line. I know a lot of lawyers had to deal with that one, and unfortunately, like I said, by the time it comes to the lawyer, uh, perhaps it's already too late. So to use that analogy, the baseball analogy again, we might just be the closers in the bullpen, but we're still part of the team, and making sure that everybody is well aware of what the goals are of this transaction prior to actually putting pen to paper on a binding contract, the agreement of purchase and sale, or any of the mortgage paperwork. It's to understand these regulations. And then, of course, I know the one that really threw a lot of people for a loop or was at least that vacant home tax that came in Toronto. And the reason I bring that up, in Kitchener, maybe 5 years ago, we weren't so concerned. But the vacant home tax, now that our scope with virtual meetings and client retention has expanded to there, even for us as Kitchener lawyers, we have to be very aware of what's happening in municipal like areas, like cities of Toronto, cities of Ottawa, if we're going to be practicing in those areas. And same with realtors, same with the mortgage guys, lenders have to be very aware of these changes. So I would say over the last, we're still in kind of the beginning phases of like beginning to mid part of 2024, but I know 2023 came with a lot of changes that really kind of put some at least some pause into the real estate professionals for what they can and cannot do, and what they should and should not advise their clients to be doing during that period.
Fair, fair. And I guess Philippe, I want to ask if you could elaborate on any recent policy changes, trends that are in the lending market that realtors should kind of know about.
Well, this one affected our programs dramatically. I mean, initially, it transformed our new to Canada program completely, because we, as a lender, we weren't sure what we were going to do with it, right? Because think about it: if a client is non permanent. Let's call it a sin, a 9 sin number, just to make it easy for everybody. And I know that's a generalization of the rule, but just so that everybody understands what I'm talking about, you suddenly have a situation where this customer is going to have to pay, and correct me if I'm wrong, Jamil, it's 25% of the purchase price, correct? For NRST?
Like as the on the purchase side?
The non-residential speculative tax. It's
Yeah,
if the
yeah.
customer
So
is
there,
non-resident, right?
yeah,
And so there's two things there, right? So if a customer is not in Canada, period, they can't buy it. It's a purchase ban. But if they are in Canada, they're working here, they're on a work permit, but they're not either permanent resident or Canadian. Under our new to Canada, we can still do that deal, right? Even if they're a refugee, we can still do that. Well, a refugee is a different rule because there's rules there, but whatever. So let's say, so initially as a lender, we're looking at this. Okay, client has to come up with 25% of the purchase price. Where's that money coming from, right? And so there's a series of problems there that we had to go through our own selves to try to fit the program. And I confess, we're still going on a deal by deal basis here, right? So just so you know that sometimes these regulations can have huge impact on how we do lending and on our programs, right? In terms of technology, realistically speaking, I mean, we internally at MERIX Financial, we've gone through tremendous tech changes, right? We just changed into a brand new portal. We changed our underwriting center systems. We were on average, a normal deal with us would take anywhere between 2 to 3 hours for an underwriting to do the pre-scrubbing. Right now, it takes them about 10 minutes, right? So the capacity that we've grown on based on the technology that we've added has been tremendous. A lot of it has to do with our spectacular owner MCAP coming in, buying us, and then really injecting a bunch of new technology into us. That's going to allow us to have solutions and products that are going to be better for our customers in the future. But speed velocity is something that we've improved on dramatically thanks to technology. I'm seeing a series of AI driven initiatives that potentially are going to give us a lot more ability to eliminate some of the deals we don't want to do. And that's created problems in our systems. Keep in mind that the more we can get involved on good deals, the easier it is for us to treat those good deals properly. And I'm sure mortgage brokers will appreciate that, right? And so we are consistently investing in technology. My CEO usually jokes saying that we are a technological company, not a finance company, which, obviously we are a financial company, but I get what he's saying is like, it's really the evolution of where we're going and how fast we can do things and how efficiently we can do things. So a lot of great things happening. There are some that I know about. I can't disclose, Corey, yet. So some of it
Yep.
is in the secrets of the secrets, but a lot of things happening. I'm very excited to be at MERIX Financial / MCAP. We're seeing a lot of great initiatives, great investments, and we're going to be a company to reckon with.
That is awesome to hear. That is awesome to hear.
Just to kind of put it in
Yeah.
another, like when you bring up the NRST, like the non-resident speculative tax, like there's an interplay here because like that was an Ontario measure, whereas the federal, like the ban was the federal measure. So, knowing the law here, and this is where, like, again, nothing is to be construed as legal advice to anybody. Okay, typical lawyer, but there are exemptions under the federal regulation. But if you fell within one of the exemptions, that didn't mean that it precluded, like it didn't, you weren't exempt from paying the NRST. And this is where it became a very, like, almost like a Venn diagram of who has to pay what. And these were very challenging times for a lot of buyers because that's where a lot of the investment came in. And so, again, just like another measure or another reminder that we have to be very careful from everybody's perspective because anybody that touched any of those transactions, it still does because it's still valid. That you're aware, or at least you do your pre-qualifying of clients and asking them the questions. Where do you qualify? And if not, maybe if you're unsure, send it to somebody that does know that answer for everybody's sake.
My favorite sentence, please reach out to a lawyer.
I use that a lot too. Like, you'll have to talk to your lawyer about
Well, it's better than the "why didn't you call me earlier?"
that.
That's for sure.
Yeah,
That's for sure.
I guess, Jamil, that's one that you use a lot. Why didn't you call me earlier?
The more we do meetings like this and discussions like this, I find it's exactly correlated to less and less of those kind of discussions because people know, from realtors to lenders, brokers, they know I need to ask this question before I move forward. So like kudos to you for something like this to help everybody avoid me and people like me saying those comments.
Yeah.
Well, I'm only good as the team, so still keeping that team mentality. All right, so I guess we're coming to the end of things here, but I wanted to just cover really quickly because like we definitely have these discussions, and we'll have more of these discussions moving forward, definitely. But when people are listening to these discussions, there's also this other thing called their actual life, and the actual life can kind of make them forget some of the things we've discussed today. Now, obviously, I'm doing my part of making sure that we do get a recording out to everybody who has attended. But another thing is just like just ways to stay up to date, with what's going on in the respective industries, and kind of some suggestions on ways to do that. So on the mortgage side of things, I would definitely suggest subscribing to a mortgage newsletter. I'll be launching a newsletter as well that will be going out monthly to kind of keep everybody up to date. But the other major thing, which falls back into technology, but it's really cool, is set your Google alerts. Google alerts will, if you set your Google alerts, they will definitely help, propel your knowledge a lot more because it'll give you, you can set it for like every day. I usually set mine for like every 2 to 3 days, and I add words like mortgage industry, real estate law, realtors in Ontario, and things like that. So then I end up getting a whole feed of like, half the stuff maybe I don't need, but there's always some gems in there and always some great discussion points for when I'm talking to new clients. It keeps me up to date, and people want to work with folks who are up to date, and that are able to speak to current issues that are taking place. So I'll ask you first, Jamil. I'll go to Philippe. Also, the other way to stay up to date is obviously, contact your other players on your team. So contact your lawyer, contact your lender. But if it's a direct to customer lender, contact me. But yeah, so Jamil, what are some type of things that folks can do to really stay up to date with like the legal side of real estate?
So I think like a tremendous resource for all realtors are actually the brokers of record. And not just that, also like fellow colleagues. I know there's a lot of, especially in a market like this, there's everyone's kind of competing with one another, but it's still a fraternity, like the realtors, like it's a very good tight knit group of people, and I think don't discount any of the realtors, anybody listening to this, don't discount or forget the level of sophistication that the profession has, and the desire to do really well for everyone's clients. The more people talk, uh, you know, you can gain information from your own team, from other teams, as long as you guys are out there kind of talking together. Because experiences happen. Somebody learns something maybe the hard way, maybe not the hard way, but the more that communication happens, you can really rely on each other. But I'll bring that back to I've dealt with many brokers of record over the last number of years, and I am sometimes floored by the level of like the depth of knowledge that they have and what they can provide to people on their team who are otherwise, from what I can understand, sometimes a little reluctant to go to their broker and ask for advice or ask for direction. And I would really use that resource. Of course, the lawyers, we're here to help. We tend to give many disclaimers before we do that, but we are a resource, but the broker records are they're tremendous, incredibly sophisticated. I would strongly urge people to go to the resources that they already have. But lastly, there's nothing that will replace taking the time to actually read. You read about the changes, you read articles, you read experiences from people. Even Reddit threads. There's so much information there, and don't take it at face value. Do your own research after, but nothing will ever replace spending the time actually reading. That would be my advice.
Sweet. And Philippe?
So everything that was said, full, absolutely in agreement with. We're very lucky and privileged being part of a lender. We have access to a lot of information that is not public necessarily, and it becomes public, but usually after. And so, where we have our own internal resources that we obviously can't share, and we share slowly but surely with our partners. I will say I'll go the other route, which is kind of like what not to do, right? Reading, investigation, read different perspectives. Don't stick to one and oh, I agree with this. And so now I'm going to go with it. That's really important. The other thing is stay away and I'm going to say this loosely, but stay away from the quick TikTok type of video, right? Where somebody makes a statement with a 30-second statement and suddenly that becomes your truth. That could be a truth, but you got to get the perspective that's behind that truth. And to Jamil's point, read. Stay away from the headlines, right? A headline can say a lot, but it could not necessarily mean what it feels like it means. And as human beings, we have a tendency to try to somehow fulfill our own bias towards things. And if we see a couple of headlines, we're like, yeah, exactly. That's what I'm talking about. Right. And you got to be careful. Like I'm very careful with this on a daily basis to make sure that I dig deep into what's going on before, taking my own conclusions, making my own conclusions. Okay. So again, with everything Corey and Jamil said, do not get stuck on these quick TikTok informational videos that, make a crazy statement and suddenly, somehow that fits what you want for yourself and for your business and you're going to go with it, right? Don't do that. It's a trap. It's a dangerous trap. We are professionals. We advise customers. We influence clients' net worth over time. I mean, think about it. Buying a home, man, that's a huge investment, right? If that goes wrong, the losses can't be recovered, especially if you start considering things like compounding interest, etc. It's very dangerous, right? So we need to be great at advising our customers, bringing in our partners, saying, hey, I'm going to refer you to a lawyer, an accountant, or whatever it is, like making sure that the client's getting the proper legal accounting financing advice. Okay. Stay away from the headlines, stay away from the TikToks. TikToks are great. They're entertaining. I love watching them too. Like everybody does. You can get addicted to it. It doesn't stop, but whatever you do, don't build your bias on those type of videos, those type of headlines. Okay.
Yeah, no, I could definitely agree with that. That's actually a very good point. Because they are quick videos and they're quick short videos and they're very entertaining, but there's a lot more to be said than just the quick statement itself.
Yeah.
So,
And they're built on
um,
negativity, right? Like, which works, right? It's everything is right, and then people, we naturally as humans, we that's why the algorithm takes over, right? Because we love that, we like to listen to that, we like to, oh yeah, he's right, and so it's dangerous, right? Because if you let yourself fall into that trap, you could be giving your own customers, if you're basing your advice on that, it's dangerous. You're really playing a game that could turn on you very quickly.
yeah, I always say if somebody's having a bad day, they'll let everybody know, but when your day is good, they don't tell too many, right? So, it's definitely one of those things. If you've just received, a renewal rate that you don't like, you hop online, and, you could see somebody saying everything's going down, all the rates are up. Meanwhile, there's a couple hundred lenders that are offering different products that may suit you. All right, so I think that concludes everything for today for us. I just wanted to touch back really quickly with both of you guys, see if there's any last things that you would like to say, Jamil.
No, not particularly. I do. No, I think this is a great discussion point. I think we've touched on a lot of things. Uh, quite honestly, if on any topic that we've done, no matter we could have spent 10 times as much time and still just barely scratched the surface of how deep
Right.
these issues and topics go. But as part of the teamwork or the team framework that we put out there, I am available. Like if people need to have any kind of discussions, feel free to reach out. I'll help where I can, up to the point that I can help.
All right, and Philippe.
As a last, I'll say my job here is a little bit different than I guess everybody else is on the call. I again, we don't deal direct to consumer, so I'm here because I trust Corey, because I like Corey, because I've seen Corey's business. We've done business with Mortgage Savvy enough to know that we're dealing with professional, able, capable brokers. As a lender, you don't come out and subscribe somebody without being 100% sure you know who you're dealing with, right? And so, Corey, I've known you for a little bit, and of course, you're referred by Rocky and Alicia and all that. And so it's for a lender to be out here supporting a broker like this. Trust me when I tell you, If you have questions on the mortgage financing side, Corey is your guy. I'll leave you with that as a promotional for Corey. He knows what he's doing. He's calm. He's collected. He has access to a ton of lenders, not just me, fortunately and unfortunately for me, but whatever. But it's important for you to know that with him, you're going to get the proper advice and service on and helping your customer close their deal, right? And so I think that's the best I can say. I wouldn't be here if I didn't trust Corey and I didn't trust Mortgage Savvy. Okay.
So yeah, I really appreciate the kind words, Philippe. The last thing that I'm going to leave everybody with is that this is the importance of a team. This is this is all a group effort. It takes so many different entities in the mortgage transaction in order for us to even get to the closing part of it. So definitely communicate with us. I'm here as a resource for you guys. I will be doing more of these with more fantastic panelists. Hopefully, I'll be able to steal some more time from these two exceptional gentlemen as well, and get them involved on some future discussions. But I want to thank you guys for taking that time. If there's any questions that you do have, feel free to either reach out to myself or Jamil or Philippe. I will be sending contact details at the end of this, as well as a recording of our chat. So until the next roundtable, stay savvy, guys.